Since putting in a low along with the stock market on March 23rd of last year, Bitcoin has rallied a staggering 750%. Is the message it's flashing one of fear of missing out, inflation, or a hedge against a potential negative dollar event? Jack Barusian, in 2017, it seemed like Bitcoin's rally was fueled by a romance of the new technology coupled with a fear of missing out. What's different between that rally and the 2021 rally?
We're getting a large buy-in by huge institutional investors and large individual investors. Not only that, but remember, you've got a futures contract now with the CME, which really gives people the regulatory and, more importantly, the tax certainty that they're looking for going forward. Remember, there's a lot of ambiguity around the cash market. And with large payment processors really starting to accept Bitcoin for payment, is really adding a whole new dimension to the crypto.
Tim McCord, we've seen a tremendous amount of activity in Bitcoin itself. What have we seen in the futures? Has that jumped along with Bitcoin outside?
Absolutely. As we looked at the volumes that were established at CME in December, average daily volume reached over 11,100 futures contract, almost worth 56,000 Bitcoin. And what's impressive is that was up 114% versus December of 2019. And that helped to lift the average daily open interest for the month to over 11,700 contracts, which is up a staggering 252% versus December 2019.
Okay, so Jack, I talked about before how Bitcoin bottomed along with stocks and both of them have shot higher since then. Is Bitcoin correlated with stocks? Is it a risk asset? And if it's not, what is it?
I don't think it correlates with stocks all the time. I think the correlation that we're seeing, especially that we saw over the course of the last year, is more an indication of the risk appetite. But what I think is very important and what we want to pay attention to is the action going forward, and especially the weakness that we see in the US dollar and the actions by central banks. Remember, currency debasement and fear of inflation is what's driving people into these various cryptos and gold.
Tim, when we see Bitcoin as a whole, not just a futures contract, but everywhere, is it institutions, is it tech companies, is it retail traders and investors, or is it people who are hedging themselves against dollar risk?
At CME, we're certainly seeing balanced participation from all the segments in the Bitcoin futures, but it's hard to deny that institutional adoption is continuing to increase at CME Group. We can say this when we look at things such as open interest. When we look at the average daily open interest reached in Q4 of 2019, that was up over 230% at an average of 11,108 contracts in the futures. That's amazing. And then when we look at the large open interest holder, we also established a new record in December of 2020 with 110 large traders holding more than 25 futures contract or more than 125 Bitcoin equivalent. So certainly institutional adoption is happening at CME.
So Jack, Bitcoin versus gold. I have them both. I am concerned about the dollar. Why and what of that equation leads people to Bitcoin more over gold? What am I missing?
Well, remember, there's only 21 million Bitcoins complete in circulation. And that's if we mine every one of them. And there are probably millions of them that are lost forever, as we read about in the news all the time. On the other hand, gold has been mined for the last, 5 to 10,000 years. And so that, coupled with the fact that, of course, all this monetary and fiscal stimulus is driving people into the crypto. But the real catalyst was when we started to see open interest at the CME reach a certain level. Remember, institutions by charter need open interest at a certain level in these futures contracts for them to participate. It gave them an easy way for them to get Bitcoin exposure right away.
Tim, Ethereum, right when the CME announced the futures contract, I thought that provided validity to that particular crypto. I bought some, as people who follow me on Twitter can attest. Why now the right time for cryptocurrency futures contracts?
We're launching Ether Futures at CME on February 8th, and it's very exciting. When we look at why, it's really a similar story that we saw with Bitcoin. People want to access the market in a regulated fashion. They need to hedge their mining or staking activity, or they really want to access the market in their investment portfolio. So we're hearing a lot of those same themes from customers, and very excited to bring this contract to market and see what it can do for the broader Ethereum and Ether ecosystem.
With another large government stimulus package on the table, a huge story over the next several months could be inflation and the future of dollar dominance.